Hi class, today we're going to be looking at Chapter 3, ProConnect problem from Group 4 in Chapter 3. So I'm going to share my screen with you. And you should be able to see ProConnect. I also am going to have to get to the problem information. So if you'll bear with me just a minute while I get there. All right, we're going to be working on Group 5 Cumulative Software problem using ProConnect from Intuit. And in this particular problem in Chapter 3, we're going to be continuing the problem from Chapter 2, and we're going to be adding a Schedule C because on September the 1st, Allison opened a retail store that specializes in sports car accessories. The name of the store is Tow Pass, and the store is located at 617 Crandon Boulevard, Key Biscayne, Florida, and the zip code is 33149. The store is going to use the cash method of accounting for everything except inventory, which is kept on an accrual basis. The store's identification number, EIN number, is 98-732-1654. Allison purchased inventory in August and thus started her business on September the 1st with $40,100 of inventory. The Tow Pass accountant provided the following financial information. All right, class, in this problem, we are doing a merchandising form of business. So we are going to have to work with cost of goods sold. And so that's why they're giving you the information about they're starting with September 1st inventory of $40,100. As you can see from the income statement that they've given you, they have calculated the cost of goods sold for you. They've given you the information that will go into the cost of goods sold section of the Schedule C. This information is right here. The beginning inventory plus the purchases will give you the inventory that's available to sell minus what you had left over in ending inventory tells you what you have sold. The difference between your cost of goods sold and your revenue is your gross profit. And then they've given you the expenses for this particular business during this point in time. So what you're going to have to do is you're going to have to create a Schedule C for this company. And so what I'm going to do is I'm going to switch over to ProConnect, and we're going to start where we left off. Remember, when you come back into ProConnect from working from a previous chapter, it'll bring you to this menu right here. And we were working on a tax return. So I'm going to click on tax return. Notice it brings up the tax returns for 2020. And this comprehensive problem that we're doing is coming from 2019. So I'm going to click on 2019. It's going to bring up what you have already completed from your previous chapters. I'm just going to click on the client name, which was Albert Gator. And then what we're going to do is we're going to go to our income section. So I'm going to scroll down the bar here on the left. You see where it says income here? I want to click on that because I want to add a Schedule C. So I'm going to scroll down to where it says business income or Schedule C, and I'm going to click on that for you. And then they're going to ask you a series of questions about the business that you are operating. Some of the information they've given you, some they have not. First of all, the type of business that we're going to be doing is a retail store. They gave us that in the information to the problem. They also gave you the name of the company, which I've entered in for you already here. In fact, I've done this problem ahead of time, so I'm just going to be pointing to places where you need to enter information. Your business address, if it's different from the 1040, which it was, I'm going to add in the business address. All of this information is given in the instructions to the problem. We are working from the city of Key Biscayne, and it's in Florida, and this was a zip code. All of that information came from this part right here. This is the information about the company that's being operated. Notice they're using the cash method of accounting. So you would have to enter in the employee ID number, which was given in your instructions. The accounting method that we're using is a cash basis, so I'm going to enter a 1 here. All that was given in the instructions. Also, the person who owns this business is the taxpayer's spouse, which was Allison. And since this was the first year of business, I checked on that to do the first Schedule C for this business. And it didn't mention anything about 1099 forms in this problem, so I went ahead and just put no, and the answer to no was number 2 here. And then the rest of these really didn't mention anything about them. So that's basically all I entered in about the company. And if you were in the real world, you would, look at all these different sections and see if they applied to your client, but none of these really applied to this client. So the first part of the Schedule C is just determining some of the business information. I want you to look up here. There's also a menu that you use going across, and the business information is just information about the retail business that was started by Allison during this year. So we're going to really be preparing a Schedule C, which is an income statement. Do you see up here where we got income statement? If you'll click on that, it's going to go straight to your Schedule C that you have been working on in this chapter, which is basically an income statement. So the first thing they want is the amount of sales that has happened with this company. And you're going to copy that straight off of your income statement. Under the revenue, you've got gross sales, $64,050. This amount is copied straight into the income statement. This is the gross amount of the sales. Also, there were some sales returns that were given in the income statement problem information. They were $500. Again, I'm going to get that from the information. The sales returns and allowances on the income statement was 500. That's where it came from. The difference between the sales returns and allowances is your gross sales. So the difference between your sales returns and allowances and your gross sales is what we call net sales. And the net sales amount for this company is $63,550. But in the Schedule C, you only had to put in the gross sales, which was an account that you have kept a record of all the sales during this period of time. And those sales that were returned to you That's the sales returns and allowances. So you entered both of these in the Schedule C for Albert Gator. One goes here and one goes here. The next part of ProConnect that you're going to enter in is your cost of goods sold information. We're going to start with the inventory at the beginning of the year, and this was given to you in the problem right here, and it also shows it under cost of goods sold right here. To the beginning inventory, we're going to add some more purchases of inventory that we made in the amount of $37,800. So we're going to go back to ProConnect. I'm going to look for purchases, and we're doing a cost of goods sold section. The purchases is entered here. And then we're going to simply enter in the rest of the information that was given to you about the cost of goods sold. So right here where it's got inventory available, they don't ask you to record that in ProConnect because that's just the addition of these two. ProConnect's keeping up with it. But they do ask that you enter in the ending inventory amount, which was $37,900. This will come from a count of the inventory that was left over at the end of the period, and that, when subtracted from your inventory that's available to sell, will leave you with what you actually sold. So $37,900 is our ending inventory, and that's going to be placed in the ending inventory box here. And so if you took your beginning inventory, you added your purchases to that, and then you subtracted what you had left over at the end of the year, it will leave you with the cost of goods sold in the amount of $40,000. So this plus this minus this gives you $40,000. That's how they're coming up with that. The $40,000 is deducted from the net sales to give you the gross profit. We don't enter that on the form in ProConnect. They're going to figure that for us. But what we are going to enter in is the expenses that this company has. So the next section of the Schedule C will be for your expenses. And so all you're doing is you're recording your expenses for this company. The first one that they have listed is accounting, but we didn't have any accounting expenses. Advertising is the second one, and you're going to enter in $3,000 that came right off of the problem instructions. This $3,000 was advertising. There were no dues and subscriptions this year to account for, but you do have to account for gifts. Now, your gifts is $180, which resulted from, according to the additional information, the gift account details show that Allison gave $30 gift to each of her 6 best suppliers. So if you multiply 30 times 6, that's how they're getting the $180. But all of that cannot be deducted for your business expenses in Schedule C. There's a limitation to this, which we're going to have to figure out. And that limitation is that you can only give $25 gifts to, that's the maximum amount that you can give to your suppliers. So actually 25 times 6 is the total amount that you would be able to deduct on the Schedule C. So I want to caution you about that $180. All of that is not deducted on Schedule C. Only $150 is, because they limit the amount that the gift can be to $25 for each gift that is given. So let's take a look at the Schedule C that they've got listed here. Notice they don't have anything right now for those expenses, but we are going to come back to them and figure them in the blank line where that belongs. And so what we were talking about was this 180 is going to be a part of the gifts. You can only take $150 of those as gifts, and that is going to go into Schedule C as other income, or excuse me, other expenses. And so I'll get to that in just a moment. But if you follow what they've got listed here in Schedule C, we didn't have anything till you get to car and truck expenses, which needs an explanation. This 986 is something that you have to figure. Notice I have entered in some more actions about this. If you click on that 986, it'll give you a place where you can expand for details. And if you click on that, it shows you what I'm doing. I'm figuring up the mileage on the amount of the travel that was allowed for this particular problem. And the amount is 986. They did not give you this amount in the problem. You have to figure it based on your tax laws. So the way that we do that is look at your additional information, figure up the amount of the miles that you could be using. In the additional information that they gave you, it said Allison drove her 2011 Ford Explorer 1,700 miles for business that was related to Schedule C. So this 1,700 miles, you've got to put a dollar amount on that. We do that by multiplying 1,700 miles times the rate for mileage, which for 2019 was 58 cents. So if you put in your calculator 1,700 and you multiply it by 58 cents, it tells you that $986 are going to be related to the travel expense that you have for the number of miles that you've operated your vehicles that was business related. Notice they also give you some other information down here, which they do not include in the amount that was related just to Toad Pass. Allison was the driver, she's the owner, and she drove 1,700 miles. So if you multiply 1,700 miles times 58%, that will give you the 986 that I entered here. Once you have that entered for mileage, you'll click OK. And it goes back and it puts that 986 in there for you. So this is a car and truck expense for mileage. That's the best place that you could put it. And so that's where we put it on ProConnect. So going back to your instructions, we're going to look at gifts in just a little bit. Notice right underneath there, they have insurance of $805. So pick up the whole $805, go to ProConnect, enter that as insurance. The next thing that they have listed is interest at $1,700. And so $1,700 in interest goes in the interest category here. And let me see if they got a place. There's a place where you can expand this. And I didn't put it in, but you could put the name of your bank there so you would know what that was referring to. And let me see if they didn't give us a bank for this, so we don't know what it is. So I just basically entered in 1,700 in the box here because that was the amount of interest that they were using for this business. And so I'm thinking that they probably have some kind of mortgage with the bank that's charging them this interest, but they didn't give us any detail about that. So, but this is where your interest would be entered, 1,700. The next thing on the list is legal and professional fees, which was $315. So you'll enter that in the box where it's legal and professional fees. And then after legal and professional fees, there are licensing fees. So licensing fees was 900. But in your problem, there's some additional information that you need to take in consideration about licensing fees. And what it says is the license and fee account includes a $600 fine to Topaz, the company that was paid to the state of Washington for environmental damage resulting from an oil spill. So this $600 is really not a license, but it is, however, a fee. And we don't put that $500 or $600 fine in with the license. We just want to know what the license and the taxes are on our Schedule C. But your license would be 900 less the 600. That would leave you with the amount for the license. And so license is entered on down this form down here under taxes and license here. And right here under other, that's where I put that license, that $300 amount for license. The other 600 you don't record. So right here where we got license and fees, it says 900, but you have to back out the 600 to leave you with what was deductible for license. That 600 was this fine here. And then they've got a place for miscellaneous, which is 82. And the miscellaneous is entered in the miscellaneous block. They actually had a block for that, and you're going to enter it there. Your office expense was $1,250. In ProConnect, they have an office expense that you enter right here. And then you're going to move to payroll taxes is $510. Your payroll taxes on Schedule C is with taxes and something else on Schedule C. So let's see if we can find taxes. and it would go right here under taxes and license. So your tax portion was payroll taxes at 510. It goes under taxes and license on Schedule C because it's a payroll tax. And then this 300 is from your license that was given to you in the additional information of the problem, where we took the total license and fees, which was 900. We subtracted out 600 for the fees, and that left us with the license portion. That license portion of 300 is entered here under taxes and license. So there was no postage, but there was rent of 7,500. So going back to our Schedule C, where it says rent or lease, I put in the other category 7,500. And I didn't really list any details about that, but you could have here. I just entered in the amount of 7,500. So it went into rent, and it's probably was for the store building, or they didn't really tell us too much about that rent. They just said it was rent. So that's the best place to put it. Repairs and maintenance was $401. There's a place for repairs and maintenance under rent or lease. The repairs is 401 here. And I imagine if you kept a list of your repairs, you could also expand this and record the repairs separately if you wanted to. But they didn't really give us that kind of information. But all that would back up to the repairs for this particular company. So our repairs were 401. We had some supplies of 630. So I'm going to look for supplies. It's right here at 630. We've already talked about these two. So let's see what's going next. We had supplies. Then they listed the telephone, 800. Now you might remember when you fill out your Schedule C form, there's no place for telephone, that you had to use that as other on your Schedule C if you're doing it by hand. But in here, ProConnect has got a place for telephone because most companies would have some type of telephone expense. And it goes right here. Right. And then the next part has to do with travel. And with the travel, they had some additional information for that. So the total travel that they could take as an expense was 940. But let's look at the additional information to see how we would record that for tax purposes. The travel expense includes costs that Allison incurred to attend a seminar on sports car accessories. She spent $300 on airfare, $400 on lodging, and $90 on a rental car. And she also spent $150 on meals. If you add all of these together, that adds back up to the total amount of $940 here. But on Schedule C, they keep these things separate. And so what we want to do is record that she spent $300 on airfare. And where we're going to do that is right here under travel. There's a plus button here that you can expand where you can enter in each one of your travel types of expenses separately. So all three of these were given in the additional information, which totaled $790. Notice I'm not putting meals in here because they've got a separate place for meals on ProConnect. Right underneath travel, they've got meals. And notice it says to record the amount in full, class. This one hung me up because I knew that you could only take 50% of your meals, which was 75. But if you enter 75 here, it takes half of 75, so it doesn't record it right. So record the meals in full, which was 150, and then ProConnect will take 50% of that for you. If you're doing it manually, you might remember you would have to multiply 150 times 50%, which would give you $75 that you could take. But if you entered 75 here, it's going to mark it wrong because it's going to take half of $75, and that's not what you want to do. The full meals were $150, and then ProConnect will take 50% for you. You don't have to enter that as 50%. Now there's a plus sign beside of this one too, where you can enter this information. And I recorded as meals, and $150 was the amount. And so this is where your meals would go. The next item is uniforms, and your uniforms are $400. So let's see if we got a blank for uniforms. We do right here. So just enter in $400 there. And then we had wages. Excuse me, I skipped one. Utilities of $975. So there's a place for utilities here. You just enter it in. And then you would have wages of $34.70. And there's a place where you can enter the wages that you paid out to your employees. And then there's a place for other expenses. And this is where I recorded the business gifts. You remember that they gave you in your instructions that the business gifts, they had it up here, were 180. And then they had additional information about those gifts. And you see that they gave $30 gifts, but that's limited to 25 according to your tax laws, what's in your chapter. So $25 times 6 is the only amount that we could take for our gifts, and that was $150. 25 times 6 is $150, and that's considered to be an other expense. Remember, manually, you could have entered this on the C form under other expenses, and you would have written out what that 150 was for. And they didn't tell us about any depreciation or amortization. We may cover that in a later chapter. So mainly all you're doing is you're recording your revenues and your expenses for Schedule C for this company. So the amounts for Schedule C come mainly from your income statement, and then you have to look at these additional information that they've given you. So we've looked at this additional information, we've looked at this additional information. And right here it says the supplies expense account detail reflects the purchase of 250 pens with the Toad Pass logo inscribed on each pen. Allison gave the pens away to suppliers, customers, and other business contacts before the end of the year. Well, they didn't really tell us how much the pens cost us, but if it's under $4, then you can deduct those from your expenses. And all of it was put in the supplies expense account. So what I did is I looked at what we had recorded in supplies expense up here, because I didn't feel like they gave you much information about this. They gave you $630. If you divide the number of pens, which was 250 pens, into the $675, that was for the supply, excuse me, the supplies was 630. So put 630 in your calculator and divide it by the number of pens, which was 250. And that gives you a cost for the pen of $2.52. So all of that can remain in supplies expense. And that's where we put the supplies expense, was in the form supplies right here, form Schedule C for ProConnect 630 there. So what I'm trying to say to you is that this right here is just additional information. It didn't really affect you in having to calculate something extra for your taxes. The uniforms expense reflects the cost to purchase polo shirts Allison provided for each employee, but not herself. The shirts have Toad Pass logo printed on the front and back and are required apparel. So she's requiring her employees to wear these shirts so she can take uniforms as an expense. And there is a place for uniforms on the Schedule C right here. And then the license and fee account, we've talked about that already. And then we talked about the fact that she drove her Ford Explorer 1,700 miles that was for business purposes, that was related to Toad Pass, and we multiplied that by 58 cents per mile, and that gave us the vehicle expense. In July, Albert loaned a friend $7,000 so he could buy a car. Albert's friend lost his job in 2019 and stopped making payments on the loan. He plans to start making payments again, however, with additional interest as soon as he has new employment. They didn't use any of this information in solving this problem, because this person's planning to pay him back. And so he might be out a little bit right now, but eventually they're going to pay him back. So that's not recorded on this tax return. And then finally, they say in late 2019, Albert started to mount stuff from his trophy fish to display in his man cave at the Gators' home. Some of his friends liked Albert's taxidermy work, so they asked him to prepare a couple of trophy fish for them as well. Although he doubts he'll ever sell any more stuffed fish, he received 150 and had no expenses related to this activity. This is other income. This is hobby income. So we have to find a place to put the hobby income. So I'm going to go back to our Albert Gator's tax return, and I'm going to scroll down to where it says other income. Okay, so let's see. Okay, had some gambling from last chapter. Here it is, right here, miscellaneous income. Click on that, and then we're going to record this in the other income section of $150. Let me see if I can click that. Now put hobby income in there to describe it and clicked OK. So that's where your hobby income goes in. So you've got to put that down, and that goes in separately as other income because it wasn't a part of the business Toad Pass. That it didn't have anything to do with that. It was just hobby income. And so hobby income goes under miscellaneous income. And so we've gone through all the additional information. We've gone through all the information from the income statement. There's really nothing else for us to enter. And so what I would suggest that you do then is check your return. And your return information has all this recorded on it. And you can just look over this to see, if you can figure out where the amounts came from. But a lot of this was from chapters 1 and 2. Now we got 3 combined with it. So I would go ahead where it says file return, and I would create a PDF. And I would download the return. And remember, they fill out all this stuff for you. We talked about some of this before. If you scroll on down, it goes to the 1040 form. So all this that you're downloading, save it to your computer and then upload it in Blackboard. And that's how you would submit it. You would submit this information here. So I hope that's helped you a little bit today about ProConnect for Chapter 3. So we'll stop sharing this with you, and we'll see you next time. Bye-bye.